Um, awesome. Really appreciate you having me out, Nidra, and grateful to be here. Grateful for and thankful for all of you who showed up, and looking forward to an awesome meeting. And we got Stacy Young, who's going to be with Preservation Compact, a division of CIC, a stalwart in the community of making sure that they're bringing the information to us that's essential to operating apartments and operating properties in the city of Chicago. And always look forward to the presentation from DePaul University. But I want to pass it back to you, Nidra, unless you wanted me to talk about some other things right now.
No, I think we're fine. We're going to do things a little differently. Seems though we have become Zoom experts in the last year. We're going to engage the audience with some polls. So, Christine, you want to start off?
Yeah, absolutely. I'm going to launch the first poll right now. So we'd love to get your feedback, and all responses are anonymous. I'm seeing the responses coming in, so thank you all. Continue to vote. I'll give it about 15 more seconds. Great, thank you all for voting. Here's a little, you should be able to see now on your screen a little bit of an overview. It looks like we have quite the variety in terms of number of units and number of different types of properties. So thanks you all for sharing. And so we'll probably go into the next segment, but we will be having a couple of more polls just to get a little bit of a pulse from you all. So thanks for participating.
Okay, great. And with that, we will have Stacy Young of the Preservation Compact make her presentation. Stacy, and we will.
Excellent. Thank you. Can you all see that presentation now?
Yes, perfect.
Excellent. Well, thank you for the kind introductions, Nidra and Tony, and much appreciation for the invitation. I'm Stacy Young. As they just said, I head up a policy collaborative called the Preservation Compact. We work out of Community Investment Corporation, or CIC. Sorry, I want to make sure I can. All right. So CIC is a local multifamily lender. If you don't know us, we're a nonprofit CDFI lender. We specialize in multifamily acquisition rehab lending. We've been doing that for about 35 years. And again, Preservation Compact is a policy collaborative. That means that we work with all sorts of different folks, lenders, nonprofit developers, for-profit developers, community groups, and the whole notion is to come up with policies, programs, and strategies to preserve affordable rental housing. And so we've been working at the Preservation Compact and CIC with all of the government agencies that provide emergency rental assistance. And as you know, emergency rental assistance is a critical resource. Last year in 2020, the City of Chicago and Cook County and the Illinois Housing Development Authority all administered emergency rental assistance programs to the tune of about 230 million. This year in 2020, that amount of assistance is nearly triple the number from last year. Because these programs are so important and because it's confusing that all three agencies, Cook County, the city, and the state, have three different programs. Since January, we've been convening these three agencies to try to line up the different programs so that people understand how they're alike and how they're different. So we launched this website. It's chaicookillrenthelp.org. And that's what this screenshot is a screenshot of that website. And what it does is it lines up the programs next to each other so that you can easily compare them to each other. So again, this is a screenshot of this table that compares the different programs to each other so that you understand whether you're a tenant, whether you're a housing provider, how these programs compare to each other. So right now, both the City of Chicago and the state programs are both open. The state program at the Illinois Housing Development Authority, or IDA, has an acronym, the ILRPP, that's how they're referring to it. And right now that program is open to owners. It's open through June 7th for owners to apply. And again, right now through the state program, only owners can apply. The way the process works is that owners start the application process and then the tenants, so if, and I'll get to the eligibility requirements in just a second, but if a tenant is behind on their rent, the owner fills out that application and then the agency automatically sends an email or communication to that tenant and the tenant completes their own part of the application. So both the owner and the tenant have parts of the application to complete. The City of Chicago's program is called the Emergency Rental Assistance Program. That is also open right now. Now that works a little differently. An owner can apply right now and a tenant can apply right now. And again, the same thing applies. So if an owner applies on behalf of a tenant, then that tenant has to fill out a tenant portion of that application. If a tenant applies on behalf of themselves, then the owner has to fill out part of that application in order for the application to be complete. So again, both the housing provider and the tenant have to fill out the application to make it complete. The city's program is open through June 8th. So it's a little confusing that both of these programs are open at the same time. And I'm going to talk in a minute about some basic points of these programs. And just keep in mind that owners can apply for both programs to maximize their chances of getting one, but they can only get assistance from one program. The good news, and I'm going to say this several times because it's very confusing. The good news is that agencies, the governments themselves have a deduplication process. So if an owner does apply to both and they get selected by one, the way it's supposed to work is that the other one then will not send money. In other words, the owners don't necessarily, the burden isn't on them to figure out, who's paying them for which unit. That's supposed to be happening at the government level. So that's good news. Some more basics about the programs, and this is true for both programs. Here are the eligibility requirements. You need to have experienced a COVID-related financial hardship. Your income has to be below 80% of AMI. There's a priority for people at lower incomes, but you can be up to 80% of AMI as a tenant and be at risk of housing instability or homelessness. And if you are filling out an application, you can see what the agencies are asking as evidence for those things. And again, this applies to all the programs, what I'm about to say. You can get up to 12 months of unpaid past due rent. And there's 3 months rent going forward that you can also ask for. And that again goes for both programs. The payment goes directly to the property owner. And there's lots of technical assistance available. There are call centers and community agencies. And as I said before, you can apply for more than one program, but you can only receive assistance from one. You can't apply to both agencies and get double the assistance for the same unit. So now I'm going to focus on the Illinois ILRPP program. This is a statewide program. Again, I said this, property owners start the application. This only covers rent. It does not cover rent utility assistance. And the maximum amount is $25,000 per household. There's one tricky thing here, and the reason I'm highlighting it is because it's different. The state is treating this differently than the city. So if there was a unit in 2020 that applied to IDA for assistance, and they received, IDA was only giving out these lump sums of $5,000 in 2020. So if a unit received that $5,000 in 2020, but that unit was actually behind by, say, $10,000, if you're applying to IDA for that same unit, you cannot request that $5,000 extra dollars that was not covered in 2020. You cannot request that on your 2021 application. So that's one difference between the city and the state programs. Now, if you didn't get any award from IDA at all, that's fine. You can apply back through 2020 arrearages, that works. But again, if you got the IDA grant and it didn't completely cover your 2020 arrearages, you actually cannot apply for that additional coverage in this 2021 program. On to the City of Chicago program. Not surprisingly, this is City of Chicago only. Like I said before, property owners and tenants both can begin the process right now. For the city, they are including utility assistance if you're behind on your utilities. There's no cap on the assistance. So IDA had that $25,000 cap. The city does not have a cap. And unlike what IDA, I just said about the state program, if you received a $5,000 award from the state in 2020, and that did not cover your arrearages, in the city program, you can apply for the amount of money that was not covered with that IDA award. You can get that amount from 2020 through the City of Chicago. And so just a few things to keep in mind moving forward. I said this again and again, applications can be made to both programs because they are both open right now. Only one will be funded, as I keep saying. And again, it's that all of that deduplication is happening behind a curtain. So owners don't necessarily have to take on the burden of figuring that out. As I said, there's a lot of information about both programs. They both have very comprehensive frequently asked questions documents. They both have call centers, and they both have community groups that are functioning as technical assistance providers. So here you can see the call center number for the city, the call center number for the state. Check your documents. And so, they are asking you to upload a lot of documents to prove eligibility, et cetera. You might want to just check your documents to make sure they say what they're supposed to say. So for instance, if you're looking for proof of ownership, you want to make sure that the name of your company is on the same document as the address of the building that you're applying for assistance on. So just double check. They name a bunch of documents, but make sure that the right information is on those documents. And then I would just add that the City of Chicago is covering utility arrearages, but you should also keep in mind the state of Illinois generally has a lot of money for the low-income heating assistance program, or LIHEAP. And whoever is out in the world, maybe you're not behind on your rent at all, but you are behind on your utilities. Everyone should be checking out that utility assistance because there's a lot of it available. And then the last slide just includes these links. So again, this is the top one is the unified website. So that's kind of general information. It compares the programs to each other. The second bit of information is about the state program that they call the ILRPP program. And then the third link is for the new City of Chicago program that just launched this past Monday. So I'm happy to talk more about any of those programs. That was a quick rundown. It is a little confusing because the programs are a little bit different, because both IDA and IDA, the state of Illinois program, and the city of Chicago program are open at the same time. But also just keep in mind, there's a lot of money available. You should definitely apply. Take the time to apply. If you have questions, use those call centers, use those community agencies. There's a lot of money available. There's actually another round from the federal government about the same amount of money that hasn't even been released yet. So apply for this money. Keep in mind there's more on the way. This is really, really important to make sure that the buildings stay healthy, your tenants stay healthy, that residents are, strong and not behind on their rent, and that buildings can be maintained adequately. And I'm happy to answer questions, or we can wait till the end.
Thank you, Stacy. That was very informative. If you have any questions for Stacy, can you please put them in the chat? And in the interim, Christine is going to ask you some more questions via polling.
Great, I'm going to launch the next poll now. So Stacy, there's a question about whether you can get Cook County and IDA assistance.
Hi, Yorley. That's a great question. So you can apply for both, but you can only receive one. So you can apply so Cook County, right? Their program already closed. I didn't even mention Cook County. Their program open and closed. And if you received money from Cook County for one of your units, you cannot apply for that state money because you already received assistance. If you don't know if you received assistance from Cook County, and you might not because they haven't made all their decisions yet, you can go ahead and apply to this state. And like I said, behind a curtain, all those agencies are sharing data to make sure that they don't pay you twice. I hope that answered your question. Can a new owner apply for prior rent owed? I think you would have to look at the document. That's a really great question for the call center. And maybe there's another owner on this call that has experience with this. You would have to check in and see what kind of documentation was required from the owner. So for instance, if the owner is supposed to submit a ledger showing those arrearages, I'm not exactly sure how that would work. But again, I would imagine you could call the call center or one of those community technical assistance agencies to ask.
Stacy, did you say that the arrearages go back 12 months and then you may be able to look up, if they're still having hardship, maybe go forward 3 months? Is that how it works? Or
that's right. So the applications are set up so that you explain what your arrearages are right now. And then I'm saying this. There's an easy way to be like, do you expect that you will also need 3 months in advance? Check this box. I recommend checking the box. They're trying to make it easy because they do recognize that these programs take so long to put together that people are still going to have problems over the next 3 months, and they have so much money to spend that, they want to cover people into the future, that people aren't automatically getting jobs right now. And so if you check that box, then you will be getting that 3 months into the future. But keep in mind that both of them have both the City of Chicago program and the state program have non-eviction policies, so that any month of rent that is covered with this assistance is a month where you cannot evict the tenant, right? Because now their rent has been paid. So that's just something to keep in mind too.
awesome. Yeah, I don't think pre-pandemic is applicable. This is my guess.
You're right.
That's been one of the challenges. I see a question there. That's been one of the challenges with pre-pandemic evictions, even though that it's been a halt. They've been pushing, really talking to officials to see if they can unjam the logbooks for those people that were obviously behind before this even started. But still to no avail. But this is for COVID assistance.
That's right. That's right. And another important point, Karen P. asked if someone who passed from COVID and was behind on rent, if they could get arrearages there. The unit does have to be occupied in real time in order to apply for the assistance. So whatever the situation, for whatever reason, if the tenant is no longer there, that unit would not be eligible for assistance.
Oh, wow. Wow.
I don't know, Stacy, that sounds like something that we should be able to lobby for, because if someone died during COVID, I can't think of a more COVID-related reason for delinquency than you died and you don't have the money to pay your lease.
Nidra,
Just saying.
it's a good point. That is, you know what? It's kind of hard to get around that logic. Yes, that is true. And I honestly have never heard that particular question before. Usually people say my tenant moved out. Can I still apply for the assistance? And the answer is always about the unit being occupied. So
I can't tell you the number of, I mean, I can, there are so many neighbors that have died from COVID in my immediate surroundings. So it's real. We were hard hit by COVID, and it was not, it affected us in so many ways.
Yeah. And someone asked about a COVID declaration. Do tenants need to sign a COVID declaration stating unpaid rent is COVID related? I do believe there are some documents and attestations that both the state and the city have that someone has to sign. They're, I think, the same form. But I do think that tenants have to sign something regarding the COVID related issue.
Awesome. Thanks for sharing that. You guys got more questions. Stacy will have her contact information in the chat. You can send an email. You can send an email to me, Nidra, and we'll try to get you pointed in the right direction for those. We do have a pretty aggressive agenda, and we want to make sure we kind of keep things moving along.
So, Christine, can you share the polling results?
Yeah, just really quickly. So we have about 50% of people whose rental income has not decreased since the pandemic, and about that number haven't applied for assistance, which makes sense. And about 80% of the group aren't planning to evict any tenants. So pretty interesting results. Thanks everyone for sharing. So I think next we're gonna pass it over to Brenda.
Am I not in? Oh, there I am. Hi, everyone.
I'll just give it about 30 seconds for people to just respond, and then
Okay.
go right ahead.
Okay, and I can wait. Do you want me to wait or go on and start?
Can you share your screen?
Yes, I'm setting it up now. I was having technical difficulties. So I'm trying to get it to share now. Sorry about that. Okay, here we go.
Okay. In the poll now,
Okay.
it looks like we have about 88% of people have not used mediation services and 12% have. So take it away, Brenda.
Okay, thank you very much. Hi, I'm Brenda Boyd. I am the Restorative Practices Coordinator at the Greater Chatham Initiative. And I'm just going to talk very briefly about landlord-tenant mediation, which is a new service that we'll be offering at GCI. So if you have not gone into mediation, I hope this at least gives you a brief background on what the service can provide. Landlord tenant mediation is low cost, and landlords or tenants can request the mediation for a number of reasons, including property damage, security deposit, non-payment of rent, habitability issues, excuse me, just a myriad of reasons that you can go in for mediation. What we have found is individuals that participate in the mediation process, they're just by default creates a mutual sense of respect from the property owner and the tenant, because the tenant feels like the property owner at least took the time to listen to them. And then it allows the property owner to get an understanding of maybe why the situation happened in hopes of reaching a resolution. The very brief benefits of this type of mediation are that it will de-escalate any type of disputes that can sever the relationship that you have. It is quick. You don't have to wait for a court date. You do the mediation as long as both parties are in agreement. It is fair because the mediation agreement is drafted by the parties. It is confidential. Nothing that is in mediation can be carried over into court, and there is a confidentiality agreement that is signed. So it's not a fact-finding mission where the tenant or the landlord is saying, well, I just need to find out about this. You cannot take that information into a court. The process stays in the mediation. And it is definitely less expensive than eviction. And if you own properties, you know the cost of getting an attorney, paying those court fees, and hoping that you can evict or come to some type of resolution for the problem that you have. You may even go to court and the judge gives your tenant that hasn't paid an additional 30 or 60 days, and you're still in the meantime not getting any funds. So with the mediation, you are able to sit down, come to a resolve, and it's only going to cost you a minimal amount. Some of the differences between court and the mediation: in court, you have a risk of losing at trial. Even if you have all the facts, it is dependent on the judge's decision. Again, I just talked about the attorney fees and court costs. And on average, if you go to eviction court, you may get 20 minutes. I have seen cases where you have a minimum 5 minutes because the backlog is so great. In mediation, the big benefit is you can have 90 minutes per session to come to your type of resolution or agreement, whatever that agreement is going to look like. Again, it is something that the parties will decide. I just spoke briefly about the confidentiality agreement. This is the document that you cannot even start mediation unless both parties have signed. Once it's signed and we start the mediation, if you get to a point of some type of agreement, whether that agreement includes a settlement, maybe it's not the 6 months that they're past due. It might be you agree, let's do 3 months, you agree to move out on the 2nd. We're going to both walk away. I can now re-rent this property and we're done. So you've got your settlement amount, your move out date. Any damages that may or may not have happened to the property, you can mediate that. And of course, the number one is unpaid rent. Landlords may look at this sometime as tenants are getting away with murder, but they're not. It is a legally enforceable contract if you can come to an agreement. And then what happens is if that person defaults on the agreement, the benefit for the landlord is you can now go in with your initial claim, whatever that claim was, and you have a breach of the resolution agreement on your side. So it tends to be a win-win for landlords, even though it does give tenants a voice, but it really does tend to be a win-win for landlords. And as I stated, I just wanted to give you all a quick overview, just some general information on this method of resolution. If you have any type of landlord-tenant issues, I can be reached at our office. That is my contact information. And we are ready, and we'll be kicking this off mid-June. So if our services are needed, we're available. So does anyone have any questions for me?
Thanks for sharing that, Brenda. A very good program initiated by the Greater Chatham Initiative. A lot of the successful property owners kind of use the court to create a mediation or use it as a mediation grounds so that they can come to a resolution with the tenants versus going to a trial and doing all of those things. Glad that the Greater Chatham Initiative is bringing these kind of programs so that we can work out these differences, work through them, and show up to court if we need to say, hey, here's the agreement that we have. We've got this worked out. There's no need to continue the litigation. Or
Correct.
We tried to work through this. We created an agreement, and it just didn't work out. So you know, it really shows that you're trying to work. And sometimes you during that conversation, you find out what the real challenges are, and it may not be what you think it is, right? and you get things resolved.
Yes, and thank you for bringing up that point, Anthony, because that is the big thing. You can just go, let's get this done with and be over with. So yeah, thank you, Anthony.
Awesome. Thank you.
Okay, there is a question that says, are these services for only Chatham owners? It is not. It is for the Greater Chatham area. So it would be Chatham, Auburn, Gresham, any of the communities there. Even so far had people to reach out to us from the north side asking about our services. So we're trying to make it available, but we do want to focus on the Chatham area.
Definitely going to give priority to Chatham and the communities that touch Chatham.
Yes.
But if we're not too backlogged, it doesn't hurt to reach out to us and see if we have availability for other locations.
Yes.
Awesome. Thanks again. We'll make sure that the information is in the chat in case you guys get questions tomorrow or want to send in and find out more information about the mediation process, how it works. We'll definitely share that information with you so you can reach out. And definitely I or Nidra or Brenda will definitely point you in the right direction if you're having those issues that come up where you think we should be involved.
Yes. Thank you.
And it doesn't even have to be evictions, right? We talked about it before, Brenda, where there was, you know, it was like, hey, somebody was barbecuing on the back porch or in the front yard, or it was some other issues that come up with managing properties that aren't so much rent related. I would imagine there's probably things that come up now that marijuana is legal and things like that, where you need to get an audience with the tenant and have those conversations.
Yeah, so you can even mediate nuisance issues, and including the marijuana and, you know, dogs bark.
Kind of stuff.
Yeah, absolutely. You can do all of that. You know, as long as you feel that it's an issue, you can address it.
Yeah, awesome.
So thank you all for your time, and my contact information is there. You can email me any specific questions, or you can call me in the office at any time. So thank you all very much.
And I just want to say that we're so pleased to have Brenda. Brenda is a Chicago native. She's a paralegal. She's a professional mediator. She does our restorative practice program. She is just awesome. And so we're so glad to have her as a resource, especially during this challenging time.
Well, thank you, Nidra. Thank you. I'm here to serve.
Great, so I'll just end the poll right now. It looks like we have close to 60% of people said that they would be very likely to use a service, and about 40 are somewhat likely. So thanks for voting.
Okay, so next up is Jeff from DePaul.
I think Anthony is going next, right?
Oh, I'm sorry. No, oh, you're right.
Is it me? All right, let me see.
It's you.
Awesome. Yeah, let me see if I can figure out how to share my screen now. Oh, I think I need to do this. I need to move this over here. Screen share. Take that. Share it. Then I wonder, can you see that okay? Or do I need to make it bigger, presentation mode or something?
Yeah, if you could do full screen, that'd be great.
All right, view. Okay. Yeah. Let me stop share. I think I need to do that before I share it. Slideshow. There we go. All right, is that better? I hope so.
Looks good.
Awesome. All right, so this is a little bit of a presentation from a joint presentation that I did with CoStar earlier in the month when we were talking about Chicago and specifically the south side of Chicago and what's been happening over the past year. Now that we're 18 months into the pandemic, or 18 months into our new normal, is the shock value is there, but what are the effects and what are the effects and what's happened on the south side of Chicago specifically? So we lost somewhere in the neighborhood of 400,000 jobs in Chicago in the period of 6 to 8 weeks, which is more jobs than Chicago lost in the whole period of the Great Recession of 2008. We have clawed back about 50% of those jobs, somewhere around 200,000, but there still is a significant delta. And from what we're seeing, the recovery has been K-shaped, which means it's been bifurcated. For certain segments of the population and certain segments of the city, they've went up like a hockey puck, and other areas have continued to linger and suffer. In some respects, some of the job loss hasn't come back for our communities on the south side, which were some of the more heavier areas with unemployment even pre-pandemic, right? There wasn't alarm bells ringing when our communities were 12 and 15% unemployed, but when this happened for the rest of the country, all of a sudden this was a state of emergency, right? So the south side of Chicago has been on a continuous state of emergency. So that's been the recovery. Because the pandemic shifted how people use space, more people started working from home, restaurants and entertainment venues shut down. There was a new premium placed on backyard space, both inside space and green space. And this trend actually affected the housing market. We saw appreciation last year, so there are some bright spots of over 11% nationwide, and we saw that trend in Chicago, where just single family homes really began to sell at a more rapid pace, even above the asking price. And that's been good information for what we've been seeing. And also the Southside multifamily market space actually outperformed downtown and some of the core areas around the city on the north side for the first time on record. One of the reasons was because when the pandemic started, a lot of those micro units downtown and some of those smaller units on the north side of Chicago weren't so attractive anymore. A lot of what the owners were selling them was, hey, downtown is your backyard, or Lincoln Park or Fulton Market is your backyard. You don't need a big unit. I remember they were building Wolf Point Tower, and the actual apartments are like 350 to 450 square feet. And they were saying, don't worry about it. Your apartment is just sleep. We have 3 or 4 floors of amenities. We got a rooftop deck, and you got the whole downtown and River North as your backyard. Well, a lot of that's been closed and shut down for the greater part of a year. So those units were no longer as attractive, and people needed more space. They needed to work from home. They needed a 3-bedroom so that they can have another space for an office, right? So Southside apartments became more attractive, and we actually saw the occupancy levels increase. We saw the rents, even though the rents were mostly flat on the south side of Chicago. Some areas got a 1% gain. Some areas were ticked up a little bit, but that tick up was, in my opinion, mostly flat. But we saw rents in Lakeview, Lincoln Park, even downtown going backwards, where the property owners were offering all kind of incentives, rolling out the red carpet and things like that for them. Also, the office space became less attractive in the high-rise buildings because people just wanted to be less became more, right? As far as people were concerned. So we did see actually the Hyde Park market office space people started to, their occupancy levels increased during the pandemic as people got away from the south side, the bigger spaces. And it's just showing a correlation between occupancy rates and market rents. And for the most part, the south side was at a 90% or better occupancy rate. And with the rental assistance programs that Stacy talked about earlier, a lot, even though there was some unemployment and there were some issues as far as being able to make the rent payments, we did see at the end of the day with the rental assistance programs, most of the properties performed at or near 90% at the end of the day. So we did end up in a good place. Sales volume for multifamily properties remained strong. And into especially the last quarter of 2020 and the first quarter of 2021, we have seen a little bit of a drop off starting in 2021. But one of the good things, one of the bright spots when we look at the last 12 months of activity, this is a heat map. This area is Avalon Park and Chatham. Chatham had a good velocity of multifamily sales. We expected in this area, South Shore has always been a hot market, but one of the other bright spots over here has been Auburn Gresham. Auburn Gresham has had a slew of activity from investors looking and seeing that area, if you will, as being a bargain, right? I think that Auburn Gresham, this is Auburn Park getting into West Chatham. These areas have been undervalued and underappreciated, in my opinion, for a very long time. But the investors have been able to go over there and find solid returns. And we are getting more and more activity from investors on the north side of the city, as well as out-of-state investors looking into our market as a value. One of the other areas that was a little bit hotter was the Chicago lawn market. The asking price differential is at one point here in 2020, we were getting a little bit more than list price. So properties have been still hovering around 5 to 10% of the asking price. So that's remained strong as well. So the cap rates are mostly in line with the long-term average. There hasn't been any significant jumps or significant declines as far as the south side of Chicago is concerned. It's been a surprisingly our market has held up relatively good even during the pandemic. So let me see if I can figure out how to stop the share if I didn't already. Are there any questions? Stop share. Stop sign. Just push the button. Awesome. All right. Well, thank you for listening. I'll have my information in the chat. Chicago is a dynamic market, and we've pretty much held up over the years. One, because we have a really good pipeline of talent coming out of the universities. It's a lot of great universities in Chicago. University of Chicago, DePaul, Northwestern, Loyola. I mean, the list goes on. And in the region, we also have 36 Fortune 500 companies. I think a lot of reason those companies are here is because of the talent pool coming out of universities at an affordable rate. And our cost of living isn't crazy when you look at that compared to other cities our size and even some smaller cities like Seattle and other places around the US. I think Chicago remains to be a bargain. And despite all of the white noise, will continue to be an attractive place for investors and will be an attractive place for businesses and large corporations in the years to come. Thanks a lot.
Thank you, Tony. There's a question about mixed-use properties.
Sure. Let me see if I can find the questions. Yeah, so mixed-use properties, it's been kind of a mixed bag. I've been pretty active on some of the South Side retail, and some retailers have seen a spike. Some of the clothing stores and some of the local venues on the South Side of Chicago have actually seen business increase since more people are doing more things locally. I can remember a few times going out with the family. We go downtown because we had to go to City Hall. We had to do some business downtown, and it was a bit of a ghost town. And when we came back to the city, Beverly, Hyde Park, even parts of Chatham, the 75th Street corridor seemed to be busy, right? There were lines outside the door of some of the local neighborhood restaurants and things like that, when I could just walk in and get a seat at some of the tables that were filled up downtown. So in some respects, the mixed-use properties have been performing better during the pandemic, but even post-pandemic, Southside retail has been a struggle, and it's been difficult to get, it has been difficult at times to get lenders to buy into financing Southside retail when it becomes the mom and pop shops and things like that. They were saying, hey, they just didn't have the confidence in lending on that deal when Macy's is talking about closing a flagship store, or Cheesecake Factory is having problems paying their rent. Why will we, loan on this restaurant that we never heard of? But I think we've gotten over that for the most part. We're getting a lot of traction on some mixed-use properties on the 75th Street corridor. We actually have a closing scheduled on one now. It's fully occupied since the pandemic and fully collected in the retail portion. And even the appraiser sent a note. I find this hard to believe, where we're like, hey, here's the bank statements. The money is coming in, and the retailers are telling us that the pandemic has been good to them. That's the property on 75th and Eberhard. We have another property on the corner of 53rd and Blackstone with the Boston Market Inn that we're working on right now. Same thing. The retail is booming.
I have a question.
Sure.
Hey, Tony, how are you?
Hey.
How can I find out the average cap rate in the certain area?
That's a good question. So the cap rate is going to be relative to the neighborhood and the asset. It's very difficult to publish the cap rate, but if there is a particular neighborhood that you're looking at or a particular asset, we can run an underwriting report for you probably within 20 minutes and give you
Oh.
some real good data on that asset and on what's happening in that particular submarket. With the South Side being so bifurcated, if you will, where it's kind of block by block economics, we've been able to drill in and see, hey, what's going on within an eighth of a mile of this property. That's one of the reasons they were able to bring Whole Foods to 63rd and Halsted. It wasn't just, hey, they were trying to do a charity work. What they did when they drilled in on that submarket right around St. Bernard Hospital, they found out that there was a significant number of people that were living there that were employees at the hospital and employees from other places that were making north of six figures. And also that 63rd and Halsted corridor has tried and true over the years. Before the university came and kind of did the eminent domain thing, that was the second busiest retail corridor outside of Michigan Avenue in the city of Chicago. So, but we can do that, Steve, and we'd be happy for anyone. If you're looking at a property, you're thinking about making a move on it, or you just want some information on a particular property or a particular neighborhood or a particular submarket in that neighborhood, we'd be definitely happy to put that information together for you.
Basically, you're saying that you have a method that we cannot share.
And I heard that it's CoStar. CoStar, we look at CoStar, we look at about 15 different metrics. And one of the things is we're underwriting about 200 to 300 properties a year. So we're able to look at the rents that's being collected by owners year after year. And we're selling properties and look at those comps to actually see what's going on and give you the real-time information that we share. But congratulations. I heard that you closed on your 198 investment property, many of those on the south side of Chicago.
Right.
Good job, Steve, with impacting our communities and revitalizing our neighborhoods. People don't give investors enough credit. Every one of those properties are a little economic powerhouse that's employing people to paint, cut the grass, and providing quality, affordable housing in our communities. Thanks again for your contribution.
Welcome. And move on to the multi-family. That's what Thank you.
Thanks.
Okay, with that, Christine has another poll for everyone. Tony, that was awesome. So thank you so much. I always look forward to your presentation. I learned so much and you're so good at it. So there you go.
Thanks.
So I think we're gonna save the next poll until after the next presentation, so.
Okay, and with that, the guy who needs no introduction, Jeff Smith. Jeff.
Good evening, everyone. Thank you, Nidra. It's good to be presenting at this meeting. I think I know that IHS, as Nidra mentioned, has been collaborating with GCI for a number of years. We've been producing an annual state of the housing market and Greater Chatham report for GCI for a number of years and presented at this investor summit as well for a number of years. And I was just actually reflecting on the fact that when Anthony was giving his presentation, just reflecting on last year's meeting when we presented, and 2019 was actually a really good year for many different housing market metrics in Chatham, and this was just at the beginning of COVID, and there was a lot of uncertainty about how these trends would continue and be affected by a lot of the uncertainty related to the coronavirus, this impact on the economy. And it has been a very strange year in that regard. And I think this panel in many ways reflects that, as we kicked off with Stacy, talking about rental relief and some of the challenges that renters and landlords have been going through over this past year. And the data that I'm going to be going through and the data that Anthony just talked about, highlighting a very different effect on the other side of the housing market, which is really the for sale side of the market, which has been actually incredibly strong. So let's see if I can do this here. Oops. First thing I'm going to do is So this chart here really just takes a long view of house price trends in the city of Chicago and in the two submarkets that we track that cover different components of the GCI area, Auburn, Gresham, Chatham, and then another submarket that includes Greater Grand Crossing and Englewood. And the red line is really the long-term price trend going back to 2000 for changes in single-family house prices for the city of Chicago. And then the blue line is Englewood, Greater Grand Crossing, and the gray line is Auburn, Gresham, Chatham. And you can see, during that, where that dashed line is really the bubble years, the peak of the market back in 2007. The market really crashed citywide during the Great Recession, crashed a little harder in the Englewood, Greater Grand Crossing area. In the recovery years, the area lagged the broader city a bit, but you can see at the very end there where into 2020, there's an uptick in prices. And you can see in both the blue and the gray lines that there was an acceleration and that there had been an increase in the recovery in prices leading up to that, but there was an acceleration in that price trend and that price recovery in the last 2 quarters of 2020, which again is an indicator of the strength of the single family market. So, the pandemic had a pretty substantial effect on the housing market in Greater Chatham, I guess, at accelerating some of the recent price trends that we see in the 4 neighborhoods. Median sales prices in the GCI area increased by 41% between 2019 and 2020. That was led by gains in Auburn Gresham, where prices increased by almost 55%. We look at other metrics like the share or the distribution of sales by different price tiers. The share of sales of properties selling for over $200,000 increased by 14 percentage points between 2020 and 2019. And the share of lower value sales, which, when the lowest value tier is $50,000, that share declined by 7.3 percentage points during the same period. In all the submarkets, all the communities within the GCI area saw increases in those higher value sales. I think a big component of that was a growth of properties purchased by individuals. We look at, we break down the buyers and the sellers of properties, and typically properties that are purchased by individuals, either from investors, which would be what we consider a flip, or between individuals, which we would consider more of a traditional arm's length transaction. The growing share of those sales as a part of the overall market really led to that price increase, and also as an indicator of just a recovery metric for the broader market. So, what does that look like? Well, this is looking at the number of sales annually between 2015 and 2020. So, one thing we did see was a decline in sales activity overall. So property sales did go down. Broadly speaking, the GCI area, the decline in sales was about 11% year over year. That was on par with the city, which also saw the same level of decline in sales activity. You can see Auburn Gresham had the most single family sales, followed by Chatham, Greater Grand Crossing, and Avalon Park. But when we look at prices, this is where, again, the numbers really jump out. Between 2019 and 2020, the median sales price of a single family home in Auburn Gresham went from about $100,000 to $154,000. And Avalon Park went from about $120,000 to $168,000. In Chatham, about $115 to $135,000, and then Greater Grand Crossing increased from about $75,000 to $95,000. So big jumps in the median sales price, much greater than what we saw broadly speaking in the city of Chicago. And again, just one of the metrics that we track is the distribution of sales at these different price tiers. So if you look at the dark blue line and you look at the bottom, that was what the distribution looks like in 2015. You see that almost 45% of the single family sales in the GCI area were for less than $50,000. If you fast forward to 2020, that number had dropped to less than 13%. And if you go to the far right, you see that in 2015, only 4% of the sales of single family homes in the GCI area were for more than $200,000. And if you look at the top 2020, that number was almost up to 30%. So you see the market is shifting, and prices are solidifying as the market stabilizes and starts a pretty strong recovery in 2020. Really accelerated some of those positive trends that we saw in 2019. As we think about benchmarking where GCI sits relative to other kind of peer geographies, we've worked with Nidra and her team to figure out what's a good Southside benchmark. And so this set of community areas is what we consider, Southside, the peer neighborhoods for GCI. And we look at how the prices in the GCI area compare to those peer neighborhoods. So for single family homes, for example, we're looking at this dotted line, which is essentially the median for those Southside peers. Auburn Gresham, for example, the median sales price was a little bit over, roughly the same as those peer neighborhoods. And you can see that going back to 2015, the median sales price in Auburn Gresham has increased. It's also increased, kind of relative to those peers. So it's kind of meeting now the typical sales price of those Southside peers. Similarly, in Avalon Park and Auburn Gresham, Chatham, you see a little bit of choppiness because you're measuring in sort of two different markets as they change. But you can see that across those three neighborhoods, they're performing on par or better than the peer neighborhoods on the South Side. And this is a map just looking at the distribution of sales. The dark dots are the highest value sales, lighter dots are the lower value sales. If you recall, back in 2015, there were a lot more low value sales and higher value sales. This is the distribution. Then we go to 2019 and you see that, again, a growth in just the number of sales, but also the dark dots are much more widely distributed across the communities. And then if you look at 2020, again, you see just a bigger jump in the density of those higher value sales. So again, just an indicator of really that the strengthening of the market is happening across all four neighborhoods. For the 2 to 4 market, we've seen a very similar trend. Median sales prices for 2 to 4s in the GCI area increased pretty substantially between 2019 and 2020. Citywide, the median sales prices for 2 to 4s increased by about a little bit over 12%, whereas in the GCI area, they increased by 40%. Increases were the highest in Auburn Gresham, where the median sales prices of 2 to 4s increased by almost 61% compared to 2019. And in Greater Grand Crossing, where prices increased by about 31%. As with single family homes, a similar trend where the share of sales that were selling for higher values grew and the share of sales that were at those lower value price points declined. And GCI area sales really outperformed Southside peers more substantially on the 2 to 4 side. So again, total sales declined for the most part in 2020, but again, prices increased. So again, you see in Auburn Gresham, prices were about a little bit under 150,000 in 2019, went up to 228 in 2020. Avalon Park doesn't have a lot of 2 to 4, so probably should ignore those. We include it because it makes the charts consistent, but there really aren't that many sales, so the numbers are a bit choppy. Again, Chatham similarly has seen pretty steady price appreciation, but a big jump between 2019 and 2020, and a similar trend, although not quite as high price points in Greater Grand Crossing. And again, looking at using one benchmark of the Southside peer neighborhoods, we see that prices of 2 to 4s have consistently outperformed those peer neighborhoods in both Auburn Gresham and GCI. In Auburn Gresham in 2020, prices were 34% higher than the median price, 2 to 4 prices for peer neighborhoods, and 27% higher in Chatham than the peer neighborhoods. Citywide, the prices of 2 to 4s are lower, but as you can see, both GCI, both Auburn Gresham and Chatham have seen pretty substantial growth and are getting closer and closer to reaching those city median average. And 2020 again was a good year for that because, as I mentioned earlier, prices in the GCI area increased much faster than citywide for 2 to 4s. And just similarly to the single family chart, you would read this as in 2015, 40% of 2 to 4 unit sales were for $50,000 or less in the GCI area. In 2011, that number was 11%, and 7% of 2 to 4 unit building sales were for over 200,000 in the GCI area in 2015, and that number was almost 47% in 2020. And this is a similar set of maps for 2 to 4 unit building sales. The map looks a little different based on where the concentration of those 2 to 4 unit buildings are within the GCI area, but you see, again, similarly, more sales in 2019 compared to 2020, a lot more dark blue. And then again, if you jump forward, you see maybe fewer sales, but a lot more dark blue dots, particularly in some of these MMRP areas, which is where the GCI folks have been working on the micro-market recovery program with the city of Chicago. And then again, 5+ unit buildings, somewhat surprising. I was actually glad to hear Anthony's his data kind of confirming some of these numbers, that actually the 5+ unit multifamily rental market was performing pretty solidly outside of the loop, and particularly in the south side and the GCI areas, because we saw these data and we're a bit surprised because we thought that the multifamily side was going to be a bit more impacted than the single family side. But looking at least the sales prices of 5+ unit properties, the GCI area did pretty well. We look at number of sales, again, relatively speaking, held up year over year. A little bit of a drop in Elmer Gresham, a little bit of a drop in Chatham, actually an increase in Greater Grand Crossing, but not a dramatic decrease, especially when you think about the drops in sales that you saw in single family homes and in 2 to 4s. Much fewer sales in general because you have fewer multifamily properties, but pretty stable numbers overall. And again, prices. This is looking at prices per unit. You should read this as 53,000, not $53, in terms of sales price, average sales price per unit. And you can see again, Auburn Gresham has had a steady progression and increase in the median average sales price per unit. Similarly, Chatham and Greater Grand Crossing have all seen pretty stable and consistent growth in the multifamily sales prices per unit for properties in those neighborhoods. And this is what the map looks like for those. And again, looking at 2015, the dark color represents the total sales price, not the median, not the average price per unit. But again, you see where those multifamily properties are selling and what the prices are in 2019 and in 2020. And then, Nidra asked us to look into another aspect of housing in the area, which is mortgage lending and access to credit. Citywide lending has, generally been low compared to historic averages since the Great Recession. During the pandemic, we did see a big jump in lending citywide, primarily due to extremely low interest rates and refinancing. We did see slight increases in the GCI area, but not necessarily on par with what we saw citywide. But we did look at, so this is what that looks like. If you see the dotted line, this is the number of loans, both purchase and refinance loans per 100 parcels citywide. Whenever you see a big jump like this in 2013 or in 2016 or in 2019 and 2020, it's typically related to refinancing and really low interest rates. You'll see this cluster of lines representing the 4 GCI communities. And you'll see that the GCI communities don't necessarily have the same, a little bit, you see some of the trends relative to refinance lending, but not necessarily as extreme as the city. Also, typically lower lending levels in the city, which indicates challenges accessing refinance loans. And you see that in particular in 2019 and 2020, where you saw a big jump in lending in the city, and you saw a relatively flat level of lending in the GCI area. So that would indicate less refinance lending happening in the neighborhoods. This is another way to look at specific years, and another way to kind of pull out some of the data. So it's essentially the same data, but just looking at 4 years, 2012, 2015, 2018, and 2020, and looking at the trends within each community area. So you do see that over time, there has been an increase in mortgage lending annually, but you don't see it, again, it's less than what you see at the city of Chicago, which is a set of bars on the far right. And you see that in, for example, 2012, the number was relatively high. Again, low interest rates and lots of refinance lending. And again, in 2020, the number was quite high. And and much higher than the GCI areas. And I do think that that's area of concern in general, because when you think about existing homeowners and how they can reduce their housing costs, obviously the mortgage loan is one of the highest costs, the major cost that most homeowners have, and interest rates were incredibly low in 2020. And so the ability to refinance your loan and take advantage of those interest rates and really keep your mortgage payment at a really low rate for the next 30 years or whatever, however long you're in that home, is really important opportunity. So this is another chart that looks at home purchase lending, and looks at it in a little bit of a different perspective. It only goes through 2018, but what we did was look at a different data set that allows us to pull out specifically loans for home purchases, and also allows us to look at the race and the income of the home buyers. And so what this shows is the number of loans annually, 2012, 13, 14, 15, 16, 17, and 18. So you can see that this is a stacked area graph essentially. So it shows the total number of loans has grown for home purchases, has gone pretty substantially from about 250 in 2012 to over 600 in 2018. And then it shows who's the borrower. So what this shows is the growth was really driven by home purchase loans to middle income and moderate income African-American home buyers. And those numbers are basically 80 to 120% of the area median, 50 to 80% of the area median income would be considered a moderate income home borrower, and 80 to 120% of the area median income would be a middle income home borrower. And you can see this dark line represents, everything below it is the loans to African-American borrowers in general. So you see the African-American borrowers make up the vast majority of home buyers in the Greater Chatham area, and the growth was largely driven by middle and moderate income African-American home buyers. You did see some growth in borrowers of other race and ethnic groups, but a big chunk of the growth was really in home buying for middle and moderate income African-American borrowers. So that is the data. Happy to answer any questions.
There was a question that came in regards to the percentage of purchases and sales that were investor related versus homeowners moving in, and how many of those larger sales were flips, so to speak.
Yeah, so I'm trying to see if I can pull up the specific data from some of the files I got open. I got too many things open on my computer here, but in general, what we saw was that there was a drop in investor purchases and a growth in individual purchases, particularly individual to individual sales. So those are those standard arm's length transactions. That's where you saw the biggest growth in sales. The one exception was in Auburn Gresham, where you actually saw pretty big growth in flips, which we are saying is business to individual sales that are above a certain price point. So Auburn Gresham had a big growth in flips. The other areas had a substantial number of flips, but those areas saw growth in individual to individual sales. So investors buying properties, the numbers were lower in 2020 than they were in 2019.
Yeah, I was interested in how in previous presentations you had that information, and you're able to determine it based on, hey, this was a LLC selling a property to a FHA borrower or a person, versus now we're seeing that those people that bought those properties from LLCs, say 5 years ago, are able to trade up and trade out and tap some of their equity and create a better space. There has been a lot of demand, and that's exciting.
Yeah, no, I think that one of the things that we think is really interesting and important in the data is that growth of individual buyers, either from investors or between individuals, because those sales create more comps, right? They create more comparable sales. It's an indicator. If you look at how many sales, what percent of sales are between individuals in like other parts of the city on the north side, for example, that makes up the plurality of sales are really between individuals. And so as those types of sales grow in the Greater Chatham area, that's just an indicator of a stabilizing and strengthening real estate market.
Yeah, one of the things that we've been seeing in regards to the sales, because some people are probably pushing the panic button to say, hey, is this the end of the world? Is it that, like, is there's a bubble? But we are seeing the fundamentals are there, right? We're seeing, we weren't seeing excessive building, right, over the last 5 years. And we weren't in this uptick isn't because credit is any easier to get than it was, like it was in previous downturns. Actually, there's been an intrinsic value increase. I don't know with that sacred space in your backyard. I know I'm gardening and doing all kind of things in the backyard now, and that home office is becoming more valuable. People are seeing a need to have an additional space for a library, a study, and things like that. And also, we got the largest generation on history in their home buying years, and the pandemic is saying, hey, do it now, right?
Yeah, no, I think one of the home buying trends that people anticipated was that millennials were eventually going to buy homes, and that now that that's what they're doing, they might have gotten pushed to do that a little sooner than they maybe expected because of the pandemic and all the different needs that you just laid out about. I want a yard, I want an office, I want more space. So that really pushed demand forward. I think in addition to low interest rates, it's really allowed people to borrow more money essentially, but keep their interest, their monthly payments low. And I just think that the reason that one of the looking at this trend as a continuation of and really an acceleration of that previous trend is I think a positive indicator. If you look at a lot of the suburbs where you saw, you've seen really flat growth for a number of years, and then this year was a big spike. And to me, that's a little bit more of an anomaly, perhaps, and maybe more of an indicator of a bubble than the fact that the GCI area has had a continued and steady growth, and that it just accelerated a bit, given the conditions in 2020.
Yeah, and they were saving money too, so it was just a matter of time. Like the millennials weren't buying cars; they had to invent Uber, right? They're like, hey, I don't need a bike. I'll just rent a bike when I need to ride a bike. I don't need to buy. So they were actually, really innovative, and it was just a matter of time before they started spending some of that dough, right?
Exactly.
Awesome.
And I'm just looking at the questions here. I'm happy to share the PowerPoint with Nidra, and she can, and Christine, and they can, share it with the group or post it however they whatever the best way to get the word out.
Awesome. Thanks for sharing that information.
Great.
I'm always excited about seeing your presentation come, because it's data, how you deep dive in and like who moved in, who moved out. What about that? Because we do hear about the city losing population. You were able to tell us, I think last time people were leaving Chatham, but Auburn Gresham population was actually increasing. Any trends in that neck of the woods you can share with us?
Yeah, it's I haven't really looked into the population trend. I think in general been pretty flat because people haven't moved, right? I mean, I think that you have people moving and buying homes, but I think you saw by just the drop in overall sales that people are still uncertain about what to do. So I do think that it's a positive trend that folks who are buying are looking into the neighborhood and they're paying more for properties. But I think that there's still a bit of uncertainty around population trends. So I do think that everything from this presentation would be considered positive in terms of that there's demand for housing in the area. People are willing to pay, more, than they were last year for that housing, and that all those indicators I think are positive. And once the 2020 population data come out, it'll be interesting to see. How this housing market trend is reflected in the overall demographic shifts.
Yeah, and even though they're paying a little bit more, I'd still see the South Side, Greater Chatham area as a real bargain.
Oh yeah, no, prices are still affordable for sure.
Yeah, and that's exciting. We're working on another property in West Chatham, in the 79th Street corridor. There's a lot of exciting things going on with the Metro train stop, and Greater Auburn Gresham is doing a development, GCI 88 at 839, I believe, West 79th. And we're seeing a lot of demand for those properties over there as well. And you know, and I think it's attributed to the values have been depressed for so long, and the area has been performing. It's just, hey, that's the same bungalow, right? That they built on the north side. It's just a $500,000 less, right? With less
Right.
traffic, less congestion. That can park in front of your house.
Exactly.
Steve has a question.
So the question, can you population change in South Shore due to the Obama Library? Yeah, I think one thing to keep in mind when we think about housing demand versus population change, it's not necessarily the same thing, because you're looking at like a household is who occupies a housing unit, and so you can't, like, if you look at a lot of North Side neighborhoods, like Logan Square, I think is the perfect example. If you look at house prices in Logan Square, they've been going crazy over the last 10 years or so. But if you look at the overall population, it's actually dropped. And that's because of who's buying and who's leaving the neighborhood. And you see, in that instance, it's gentrification is really pricing out a lot of the moderate income families that were living in the neighborhood, and who are buying there are smaller households that have a lot of money and who can buy, just purchase more space essentially. So I don't know, just to answer your question specifically, how population trends are changing in South Shore. But it's another, I know house prices are definitely doing well there, similarly to what they did in the GCI area. I have to look into the specifics, but it will be interesting to see. Yeah, I mean, the whole Woodlawn is another area, again, has an alignment of amenities. It's got the university, obviously, which I think is probably the biggest driver of demand for housing and population change there, but it's also got access to parks, the lakefront, transit, great housing stock. So I think that the OPC is obviously going to be, it's a signature project. But I think that all those other amenities, including the hospital, which is a big employer, and the university, which is a big employer, are also substantial drivers of demand for housing in the area as well.
Jeff, when will we get the census data so it can tell us so much more qualitative information about what's going on? So
the census will come out. The most current census data is through 2019. 2020 data should be out. Actually, I don't even know, because it's the decennial census, so that's a little different than the typical years. But typically it would come out in the fall. I know they're already doing redistricting and whatnot using some of the census numbers. So there may be some census data already available. I have to double check on what's available, but it typically comes out in the fall. The more detailed data comes out in the fall.
Thank you. Christine, can you put in the polling questions now?
Yeah, I'll launch the next poll now. And if you have any comments or thoughts that you want to share in the chat as well, feel free. Wanted to just have a little bit of discussion now that we've seen some of the data. Okay, I'll just give it a few more moments. All right, I'm gonna close it out, and it looks like the leading response for why Auburn Gresham we saw such high demand is the housing stock and the incentives pertaining to the Chicago prize that the community was awarded, as well as Invest Southwest. And then the leading response for the lower demand in Greater Grand Crossing is public safety. So thanks everyone for voting. I think it's kind of our ending and Q&A time. I'll just share one more poll, but if you have other questions that you want to share, other comments, now is the time as we're wrapping up. So I've gotten a couple of questions about the whether we'll be sharing the recording and the slides. I know we'll be making the slides available, but Tony or Nidra, let me know if we'll be sending out the recording as well, so we can let folks know.
Well, that's a good question. We we're talking about making a recording available for members of the Greater Chatham Initiative and the Southside Community Investors Association. So you may want to reach out for more information. Definitely send us an email if you're interested in the information, and we can have the conversation. What's the website, Nidra, for GCI?
GreaterChathamInitiative.org. Christine, can you put that back in the chat box?
Yeah, we'll do.
Yeah, we'll post the information as of Tuesday on our website.
Awesome. Look at that. Yeah. All right. Well, thank you all for coming out. I think, Nidra, did we reach the end of the presentation? And it looks like are there any more polls or?
We are.
One.
Oh, thank you, Christine.
I think this is great. I'm glad. Thanks for having me. Really enjoyed this to expand the network, if you will, and to have some familiar faces here and people I haven't seen in a while, and also a lot of new names on the list. This is very exciting that we're getting this turnout too. This is a great turnout. We've since things have been opening back up, we have been seeing a drop off in attendance of Zoom, and people want to do more things in person. And we've been seeing it across the board with CAR and some of the other organizations. But it's good that we had a great turnout for this quality information that you bring every year through GCI. Thanks again.
Our pleasure. And I just want to thank Anthony and the panelists again for having such detailed information. And the reason why we make this information available to our stakeholders is so that you can make an informed decision. Information is power. Chicago is a big place, and we want you to invest in our place based on good factual data. And so I just want to thank my partners again for providing the sales price and volumes, the caps rates, the mediation, and the rental assistance, because it takes a village to keep this village going, turning in the right direction.
Awesome.
Thank you.
Thank you all for participating. We wanted to make it, you know, a little more interactive, and it was really great to get your responses and just a pulse from all of you from your work on the ground. So thank you.
All right.
Okay.
I'm gonna
So
take
Tony,
off.
do you want to break out in groups of people to chat, or you want to call it a wrap? What's your pleasure?
You know, you could do chat rooms. I think we did talk about a little bit of networking. The people are here. If you put them in the rooms, they'll probably talk. Probably, you know, we've been kind of locked in for a while. See what happens, and kind of let it wind down that way through 7:30. Breakout rooms.
Okay.
Okay, can create a few.
You got 20 people, do 4 rooms.